let's see.
Recording is on.
Perfect. All right, guys. Well, welcome to another week. Thank you all for being here. And like I said earlier, please have your thoughts and prayers for Roman and his family at this time. But it's just a reality of the situation. So going forward, I am not going to speak a lot today because Andrew actually knows more about my same topic. We talked earlier this week, and he's actually seen these changes and everything. So just a revamp and recap of this week. We are going to be talking about how this is affecting your business going forward, whether this is contracts, procedures, just your daily operations, and how this is setting a precedent, COVID's setting a precedent for doing business in the future. So the quote I'm opening up with this week is from, no, great, of course, I just closed it, from a book called Rework. A business book. It was written by two gentlemen who founders of 37 Signals. And if I can find it. Okay, there it is. So the real world isn't a place. It's an excuse. It's a justification for not trying, and it has nothing to do with you. So I felt like this was, pretty apparent. Is people are always like, well, in the real world, that wouldn't fly, or that would never happen in the real world. If you want to take zombie apocalypse movies, it's kind of something that came to my mind with this. We as Americans are very fortunate to be sheltered from a lot of the negativities that happen around the world, whether it be, outbreaks of some sort or catastrophes. We're actually able to cope real quick. Well, this COVID, it's just another excuse for not doing your work, or having an excuse to not thrive in a time like this. So going forward, that this is the real world. It's not an excuse. Put your big boy or big girl pants on and move forward. There's no more excuses. It's something that's happened. We have to learn and adapt to it. Mm-hmm. So what we're seeing, and Andrew's going to touch on this more in depth than I have, because I've only heard whispers and he's actually seen it. In the commercial real estate world, there's going to be changes in clauses with leases, and how acts of God are perceived. And is there any forbearance to this? Is there any justification for you not paying? How are these clauses built in? Are you still going to be charged, 100% of your lease, and so on and so forth? So that's going to be the really biggest change for us. But like I said, I haven't seen too much of it yet. I've just heard a lot of talk about it, and then it's also on the mortgage side. Is we just saw the numbers came out yesterday that Atlanta is the second city to have the most transactions paused or stopped because of this, just from the past month alone, in the commercial side. So I thought I didn't see that coming for Atlanta. Everything that I'm out seeing, driving around, talking to people, everything seems to be moving forward. But apparently a lot of the major purchases of large assets, we were number 2 for completely coming to a halt and stopping on those. But yeah, so interesting to see how it's going to, affect us going forward. But so, Dad, today it's all on you to start. Please lead us off into something greatness today.
Well, I appreciate it, but I get so much out of this, and Cheryl, I have to say that I kind of mirror your business. So last week, even though I didn't speak, I got so much out of it by listening to you. So I really learned a lot, took a lot of notes, and so whether I contribute or not, I really learned a lot from you guys. So I appreciate you allowing me to be on here. But how is COVID going to affect my business or the industry I'm in or whatever for the future? In the previous 8 weeks, something that Reed just said, people are lazy, and business they have an excuse not to do business, basically. But So one thing that we do in my firm is a lot of personal touch. Well, we're not getting that personal touch. So I was successful this week in writing some new accounts that were out of state. Two in Maryland, one in Indiana. And the reason that I was able to do it is one, because of this technology like Zoom and stuff, but also they didn't expect me to be present. Where someone in Atlanta would say, well, I would like for you to come in and show me this or whatever. So we were able to accomplish what I need to accomplish by doing that through the technology. Also, something that's kind of new to the insurance industry, at least in the part that I'm in, is we don't do e-signatures. You have to watch somebody sign because there's a lot of liability. Well, now they're allowing e-signatures and doing like Reed in your business, the DocuSign and stuff like that. As long as you can document that you see them do it or they're doing it in your presence, like via technology. So that is something that has changed. The other thing, like I was talking about the restaurants and stuff like that in California and the litigious society, new coverages are coming out, and new coverages are coming out like for your clients in the corporate real estate, like your tenants and stuff like that. Business interruption insurance has never included plagues or pandemics or anything like that. There's going to be new language in those policies to cover such things like that. And of course, that's a new opportunity for us in the insurance business. And there's going to be more premium to be able, because we've seen what it has done to halt business. And so there's going to be underwriters that are going to come in with, sometimes it'll be a separate policy, sometimes it'll be a specialized policy depending on the business, and to be able to cover that risk. I'm old enough to know that right after 9/11, terrorism insurance went through the roof. And before that, it was kind of a gimme on policies. It was basically no premium. But one of my clients was CSX Railroad out of Jacksonville, and their terrorism insurance went from $10,000 a year to almost $4 million a year. Well, that's kind of hard to budget. And so they had to do some risk financing and figure out how much of that they were going to keep and how much they were going to lay off to an insurance company and things like that. Because a $4 million hit to your bottom line not only affects your stock value and things like that, but it affects the other thing is, what if there is a claim? You know, where do you pay that from? So anyway, not to bore you with a bunch of insurance, but I think that now terrorism insurance has gotten down to where it's relatively inexpensive from what it was after 9/11. But that's what we're going to see in the industry as the kind of the new premium hit, is this pandemic in insurance. So,
Wow. So like, when it comes to that, so there's never been any type of, you said never been any type of plague insurance, anything like that. I mean,
well, what has happened usually in policies, they don't necessarily cover civil unrest or when the government shuts things down.
okay.
There's a little bit of business interruption insurance to help employees for a short period of time. Usually it's 2 weeks, 3 weeks and stuff like that to help a business, but usually it's shut down because of, you know, like if you're in a high rise or something, there's been a gas leak or there's been you know, the water shut off because, you know, it's cut or something like that. it's not because of a pandemic. So,
Okay.
one, it gives an opportunity with the way policies are written today for the insurance company not to cover it because it's not specifically in a policy. So they're having to go back and kind of rewrite some policies and basically see what the risk is to see if they're even going to offer it. So,
Okay.
and I do think that insurance companies anyway are planning for another wave of this, whether it's late fall or next year. But they do feel like there will be some. Maybe it's not going to be as bad, which we all hope it's not. But how is that going to affect their clients?
Future. Okay. Okay. Awesome. Well, that's good. Yeah. All right. Andrew, I think you should be up next then today.
Sounds good. I think for Reed, you and I talked earlier this week about this, and in my industry, we're kind of seeing or hearing, at least at the time, that some contracts are going to start being changed. We have standing calls with some of the large real estate attorney firms in the country, and they're already trying to figure out how they're going to make provisions and changes in their contracts to account for something like this. They're saying they're actually going to have a COVID-19 clause in the contract, which is kind of interesting to see. I don't know what the wording's going to be, and part of my question to Reed on this whole thing was, how can we account for this change either from the tenant perspective or the lease's perspective, or the leasee's perspective. A lot of our clients pay ground rents. I don't know. Is everyone familiar with ground rent? I didn't know ground rent existed before.
Yeah.
So I had no idea. But some of the firm, almost every single one of our clients in New York has a ground rent.
Yeah.
And it is not cheap. I mean, it is, one project in particular that I'm thinking of during construction is $400,000 a month of just ground rent.
Wow.
Yeah.
Cheryl, your reaction's perfect.
I'm like, I don't even know what that is.
Yeah. Can you explain that real quick?
There's another one that I can't say the building. It's like $2.5 million a month. It's insane. It's all owned by the same family. I didn't know this. Like, most of all of New York is all owned by one of like 6 families. Goldman family is one of them. So all they do is they do 99-year leases, and at the end of 99 years, whatever property has been built on there turns over to them. And it's just a crazy, insane amount of money. But, in those leases, a lot of our clients are like, do we have to pay that? They're asking for forbearance on the ground rent, and some are getting that and some are not. So I think this is going to have a pretty strong trickle down effect. And I think the people that are going to, whenever you're signing, whether or not you're signing to rent or, from the owner side or from the rentee side, it's going to be something to look into and see what the clause says. Sort of like the terrorism insurance, before no one even thought about something like this in contracts. The contracts that we see are usually written with something like, acts of God is usually the phrase. And, is this an act of God? I mean, is it man-made? Is it like what, how does this get classified? So I don't know an answer. I don't really know how to. I think the only thing is to be aware of it and to understand that in the contracts going forward, in whatever agreement that is being discussed.
Yeah. Quick question on that. So, do you know? I mean, I know you just kind of said that you didn't, but do you feel like it's going to be more of the clause is obviously going to be about payment? I assume, and how to do that. Is it going to be something like, if this happens again, is there some type of abatement that happens where they're not paying it for that time and then it's tacked on the end, or it'll be a discount rate? Or is that, do you think, just going to be all negotiated through the parties, however they do it?
I think it's going to be up to how good your attorneys are.
Yeah.
I mean, I think that
And
it's
your
going
broker.
yeah, I think it's going to be something where if I am a new startup business and I'm trying to rent some commercial space, I might get screwed if I'm not familiar with the fact that, oh, there's a COVID-19 clause that if a pandemic happens again, I still have to pay the full rent.
Mm-hmm.
That might change things. It might be, who knows how it's going to be, but it might be low hanging fruit in the negotiation. You know,
Yeah.
the owner might toss that into the contract early on, and that might be one of those easy wins for the tenant to say, "Hey, I don't want this COVID-19 clause," and the owner just says, "Okay, we'll strike that, no problem."
Yeah.
And that's, for negotiation tactics, that's something really beneficial to the owner. However, it is, whatever the outcome is, it's a win for the tenant, and it's also a win for them if it doesn't happen again.
Yeah.
So it's tricky, but it's a negotiation topic to get things going.
Okay. And that, kick that back on you on the insurance thing. Is that, you think that's a product you could have for the tenants or for the landlords?
Yeah, it goes both ways. Yeah,
Mm-hmm.
absolutely. But just a quick question to Andrew on that. One thing that I've been thinking about is, like you said, your attorneys and stuff would put in COVID-19. I don't know that I would want it to be that specific, because the next strand might be COVID-20 or COVID-21. I would want it more vague, like pandemic or whatever, just to make sure that you're covered in it, because people are going to be nitpicky if it happens again.
Oh yeah. No, what they were saying is they're not going to call it out specifically COVID-19. They're calling it the COVID-19 clause. So it's going to be a pandemic clause. What they might do, and I don't know how, I'm not an attorney, but what they might do is something to the effect of, if a government shutdown happens, with XYZ similar to COVID-19, something to that effect to reference this particular crazy. And honestly, a lot of this is also going to be state dependent.
Yes, exactly.
Georgia, we're apparently opening up tomorrow or today, I guess. So, when does that start? There's so many nuances with everything going on. I don't think I've even scratched the surface. I know people that are going for the small business loans, and then there's, how political is it? How soon can they have their workers go back? It's so many levels of detail that it's so confusing. And what's the right play, and everyone's scrambling to try to figure out how can you, get the most money without spending any operating costs. And it's just tricky. So similarly, it's going to be state dependent. It's going to be state dependent on how the wording is going to be. I think a city like New York is going to have probably different terms in the COVID-19 clause than a Montana, or
Right. Exactly.
Yeah, for sure. Awesome. That was a good insight. Cheryl, if you get up to bat, let's get it, girl.
Well, I could have a whole list of things, right? But so a couple of things that come to mind about, how my business is changing. One thing that came out early on is that the governor said that we could do video notaries, right?
Oh.
However, just because the governor says we can do that doesn't mean that lenders and servicers and those people that buy that investment paper will allow it, and they won't. So, we've had to kind of scramble and try to figure out, because a closing can never be docu-signed. All of the application documents can be e-signed. And it took us a long time to get to that point where we could have everything e-signed, up until up until maybe, I don't know, 18 months ago, we still had a handful of documents, 6 or 8 that had to be wet signed. And I think we finally done away with all of that. But a closing, excuse me. Sorry about that. A closing cannot be done DocuSign. But what this has forced us to do is come up with a way to partially DocuSign a closing. And so now there's about 8 or 10 documents that do have to physically be signed because they have to be recorded. And now most counties currently have an electronic recording, which is great. There's no longer a package that has to be mailed and, filed, by a person going through every single page. So those kinds of things were kind of in the works, but we do have a lot of people who are afraid of closings. They don't want to be, in public. And so attorneys are, sequestering here, you group in this room, you group in this room, and I'll, float back and forth. Another thing we're seeing in this world is because of the forbearance that's being offered, a lot of lenders are instituting, a COVID-19 supplement to the package, to the closing package. And mine is, I was pulling mine up while Andrew was talking just to make sure I had this right, but mine is not as strict as I've seen. Mine actually, the borrower has to certify that they have no new debts and that they are current on their debts. I mean, we as lenders can only protect ourselves so much. So what we've changed is typically 7 days prior to closing, we pull a new soft pull credit report just to make sure you haven't added anything. We don't necessarily look to see if you're late unless it's a mortgage. So now we're going to be looking at if you're late, and we're going to be pulling that 3 days prior to closing. And that's 3 calendar days. So that means if we have a closing on Monday, we have to pull that on Friday.
Friday. Yeah.
Same with employment. We're going to call and make sure that you're still employed, you're fully employed, you're not furloughed, you're not getting half pay, anything like that. But my document actually confirms that about the debts, and then that you are in a business that you do not expect to be furloughed.
Really?
But I have seen other ones that say that you will pay your first payment and you will not request for forbearance. And so because in the mortgage world, the first payment default is huge. In the mortgage world, if a client first payment defaults, that means we can no longer sell that into the GSEs. No one will buy it. A servicer won't buy it. So we have to then service that portfolio ourselves, which means we don't have more money to lend because we have to keep that on our books.
Right.
So mine doesn't specifically say that, which I thought was odd, but it does put the onus on the borrower, and then there are false statement penalties, and that could be fine or imprisonment. And I guarantee you nobody reads this.
Yeah, of course. Yeah.
They're doing a closing. Nobody's reading that. The attorney is regurgitating it, but I don't know if you know, in the state of Georgia, so we're an attorney state. We have to close on an attorney, but the attorney does not work for the buyer. The attorney works for the lender. Yeah, works for the lender. So they regurgitate it, and if you have a good attorney, they're going to be, giving the highlights. But sometimes you don't have a great attorney. So other things for us, as lenders or as loan officers, I think we're going to see compensation reduced. I think because of the business model currently, everybody gets paid commission. We get essentially basis points to close a loan. And so I think that, and that's built into the current business model, but we're losing so much money on the back end that might change going forward. Maybe not for everybody, but that call center, like Rocket Mortgage, just the phone calls or online, that starts to look more attractive for companies
Hmm.
because they pay them a flat salary,
Right.
and it's just cheaper to do, and they can then change their business model a little bit. So, I'm not seeing that for the non-bank lenders yet, but there's a lot of conversation about that in a lot of my groups. So for me and me personally, I have always done this as a philosophy, is being an educator and a leader with my clients. And I think that those of us will still be here,
Okay.
right? Educating on the process. But the non-lender loan officer that just phones it in is not going to be here. They're going to end up going to those call center places.
Mhm.
Right.
So there's obviously still a lot of value in what you do, with the education side. So if I'm hearing you correct, you're saying that you still think there's going to be people like you that are going to be non-call centers, still producing loans, doing that stuff. But yeah, I'm in agreement. I think a lot of businesses like this and like other things are moving towards call centers just because of all this.
Sure.
Uh,
Yeah, I think they will. Will the traditional loan officer go away completely? No, but I think we'll be a rare breed. And so personally, I'm moving into different space to make sure that I have another sort of way to bring in income if that kind of starts to happen.
mhm.
So I already educate my clients, and I do that part for free, but I'm developing a business model to where we would get someone completely ready, and whether they go with me or they go with a call center, they still have the same information. They're just going to have to pay me for my free information that I give out for free now, right?
Yeah, that's smart. That's smart. Hey, adapt or die, right? Move on. I like
So
it.
Cheryl, with you changing space, are you going for higher income people? Because they seem to like the personal touch and will pay for it.
Right. So I have always, my heart is first time home buyers. But I don't work with the down payment assistance and low credit scores. I don't attract that space on purpose, right?
Yeah.
So yeah, I will naturally gravitate towards the higher income earners that are more prepared, right? And then putting out my education program that will naturally attract to me the better qualified buyers too, because once they've been through this course, then they will be ready. But I would say I didn't lose a lot of my pipeline. I talked to a lady who lost $8 million in her pipeline when all the guidelines changed.
Ooh.
Because she primarily works with that 580 to 620 credit score space.
Okay. Yeah.
And I just don't work in that space.
Yeah.
Yeah. It sounds like, you definitely work with the, a lot of people my age, young professional, everything like that.
Exactly.
Yeah.
Exactly.
For sure. Awesome. Wow.
Professional's a stretch there, Reed.
Yeah. Very, very, as long as that bow behind me stretch. That thing's taller than I am. So, yeah. Yeah. Wow. Well, that's, well, Sharon, I'm glad to see that, I know that you're always on top of things and moving forward. And it's it's an inevitability that people's jobs are going to change and move out. Not to compare you to it because it's nowhere close, but the people that demand the $15 an hour are being replaced by robots. We're seeing industries change that I was like, hey, maybe we can do this more efficiently. Like you said, it's cheaper for them paying someone a salary instead of commission. But I'm glad you're on top of it and, looking for those different modes. Ever since I've known you, I know that you've been in different things when you were doing the game, the financial education game. I still remember, I think I still have that circle card too that you gave.
Oh yeah, that was a great card.
Yeah.
I didn't
was.
design that, but it was a great card.
Awesome. Well, does anybody want to touch on anything else? Anything they want to bring up? Any wins this past week that we talked about last week? You were there. I got a win. Yeah. Oh, you got a question?
I had one, but I can't remember what it was. It was when Cheryl was talking, and I can't remember what it was. What are mortgage rates dropped to, by the way?
Okay, so that's a super loaded question, and it's always a loaded question. It's just really loaded right now.
Yeah.
And it depends on who you talk to. We've come out with some special pricing that is just flat.
Yeah.
It's basically everybody in this bucket gets that. There's no changing it. So governments are actually better than conventionals right now, because we know that on the back end, if we sell this product and somebody goes into forbearance, we're going to have support, right? So services are paying better for government loans. Conventional loans are not getting that same support out of the GSEs. We actually talked about that before you came on, that on the back end, if a loan goes into forbearance, in order for Fannie or Freddie to support that servicer, they're going to charge up to 700 basis points or 7%.
Yeah.
So that's keeping our rates artificially high. When you're looking at all the indicators, if you just looked at the indicators, our rates should be well into the low 3s, maybe even high 2s.
Yeah.
And we're just not seeing that because of the risk on the other side.
Interesting.
So, if I were to give you a blanket statement, you would be anywhere from about 3.25% to 4%.
Oh, wow. Okay.
So
yeah, I was wondering if it dropped lower yet. I was kind of expecting that, because I don't remember if I mentioned it, but I refinanced my condo about, I guess, literally I closed like the first week that we did this. So whatever that was, three weeks ago. And I got 3.5 on a full cash out refi, which I think was pretty good at the time. But
that's actually very good. And I think you're going to see less of that being allowed, less cash out. So we've got some doomsdayers in the mortgage space saying that cash out is going to go away altogether. I don't think that is the case. Will they tighten up? And certainly, so right now we allow cash out into up to 80%. Could that change to 70%? Maybe.
Yeah.
I think we'll see some changes. Will it go away altogether? No. But again, when we're talking, my guidelines change all the time. Yeah, and I was saying earlier, I got 2 applications on Tuesday for borrowers that fit my pool. Like, my lender says that we will allow this, but when I go into Fannie and Freddie to get them approved, which is how we approve loans, it won't take it. The algorithm has changed so that they won't take what's going on. They're requiring what they're requiring is a lower debt to income and higher reserves on the back end. But if you're in this 600 credit score area, guess what you don't have?
Mm-hmm.
Because if you had money, you wouldn't have
600 credit. Yeah.
Well,
Interesting.
Yeah, I know. Well, Cheryl, I'm looking at my notes about you from last week, and it kind of goes in this changing guidelines, and keeping buyers motivated. Do you feel like you're still able to keep the buyers motivated this time?
Yes. So I'm getting more calls. I mean, this is how I got those 2 applications, right? They're like, okay, well, we've been sitting on the sidelines. We're ready to go.
Mm-hmm.
What can you do? Unfortunately, they're going to have to sit on the sidelines a little bit more. We got to work on their credit, and then we've got to get them some more money in the bank. But, and from what I'm hearing in other spaces, that the applications are just rolling in.
Okay.
So I don't think we're there's some fear, sure, but I don't think we're slowing down significantly to make it super scary.
Yeah. I mean, I know on our conference call on the residential side yesterday, we had something like 4 or 5 closings in one day. And we're actually down 50% year to date on closings, and which is a huge hit to the income of the business. But it seems like there's still light and people are still kind of motivated. It's just the fact is that no one can go out or not supposed to, and it feels like that seems to be the biggest factor.
Yeah, well, and then there's some fear around, am I going to lose my job? How long is this going to go? That kind of thing. But I do think that once we get open, that it will be spring as usual, and you're going to see, your growth in the residential.
Yeah.
I've got a question, another question about, are you seeing, Cheryl, more house buyers or condo buyers?
So because I primarily work in the first-time home buyer space, I see about 50-50 personally. Because that's just a factor of cost for most of my people, right? So about 50-50. And that's also, I think that has to do also with the millennials, right? They want to be in a walkable space, right? Your single families are typically out in the suburbs and they're not walkable, right?
Yeah.
Now, what I would be concerned about is that as we're talking about insurance and that kind of thing, that homeowners associations costs will start to go up.
Yes, we're already seeing that on our end.
Oh, yeah.
For sure.
Yeah, so that might price some people out of that price point, which would then push condo costs down because less people are going to buy them. So throw up a coin and decide, right?
Yeah. We're fighting about that in ours right now, about the cost. And they did an assessment last year. They're trying to do another one, and everyone's like, why? You don't do what you said you're going to do with the money anyways. You're pushing people out, and there's no reason for it for our small little neighborhood. You're not the first person to say that too, I've heard. And that was one of our major factors to decide where we did here in the city. We looked at places like where Andrew's located at 1010 Midtown, these beautiful high-rise buildings. But, I was like, I'm not paying $600 or there was one that was like $2,500 a month that we looked at for HOA, I was like, no. I was like, for what?
I've seen that. I have actually seen that. So Andrew, in 1010, what's the average cost of a condo there?
Probably average cost. There's 400 units, and they range from 1 bedrooms to I think there's most of 3 bedrooms with like a den, and they range anywhere from, I think our lowest 1 bedroom's like maybe 280. And they range up to, I think the couple of penthouse ones are like 1.5, I'd say. So, the range probably is around 5 to 7 is probably the more sweet spot. Yeah.
And then what's that HOA for that price?
2 bedroom. It's all by square footage. So it's yeah. So, I think I want to say quick math is like 50 cents per square foot.
Okay. So that's essentially a half a mortgage payment for anybody.
Mm-hmm. Yeah.
Right?
Yeah. Oh, yeah. When you start adding things up, you start to wonder, you're like, well, okay, I want to go in a condo because there's less fees and stuff. And then you start adding things in.
Yeah, it's certainly, if I were to buy a condo, I would look at, what I would have to put aside for hot water. Well, you have to replace the hot water heater, don't you? Anything walls in, right?
I'm actually trying to figure out when I'm going to do
that. So we're talking roof, yard maintenance, anything outside. So what's the tipping point, right? When does it make it, worth it? Like for somebody like me as a single woman, I certainly don't want a big yard to take care of, right? Like, I'm just not going to do it. I'm going to hire somebody.
Exactly.
Right. It's a cost.
Well, one of the interesting things in a condo building, and when you're looking at it, I will say 1010 has really nice amenities, and it has some of the lowest HOA fees in Midtown, which is surprising. If you look at a building like Spire, which the 2-bedroom there is $300,000. The HOA fees are actually higher than 1010's. which is interesting that we've kept it low so long. But you're paying for the amenities. We have a pool. We have a heat now. I think it's a heated pool. We have grills. We've got a full fitness center. We've got all these different things. And how often do you use it? I'm not a pool guy, so I don't really go to the pool. I grill out maybe 3 times a year. It's like, okay, I don't do that. The gym I use, very regularly, but during this pandemic, I was like, well, I got to start working out at home, I guess, So, how much do you want to pay for the amenities that you're not using?
Right.
There's a conference room. There's this meeting room. Never used it in my life.
Right.
So you're paying for things that you're not using. So that's the tipping point versus, I know my parents live at the Four Seasons in Midtown, and their HOA fees are double, easily double mine. I don't even know what theirs are, but I know that their HOA fee is literally rent payment. Lowe's, I looked at Lowe's, and theirs is, I think, a 2-bedroom there is about $1,500 a month.
Jeez.
So, but you get access to a hotel, right?
Right.
I mean, there are nice features. You can order room service. I mean, that's pretty nice. If you need it.
Will they come clean my condo?
They
Okay.
have that.
Well, it's like, huh? Yeah.
You have that. You have valet. They have concierge. You can also get I think they offer $100 a night hotel rooms. So there's a lot of different benefits to it, but you're still paying, $1,500. That is rent. You could go find a 1-bedroom, apartment for $1,500, and not have to pay. On top of that, you got to pay taxes and then mortgage and then this and that. And so it's an interesting, thing to look at of where is the break point of features versus money.
Yeah. And I think it's going to be, people talk about, the renters is obviously going to go up because of this crisis. I think, it kind of always steady is. But then when does it make sense for someone to own a condo like yours and rent it out? Because what are you going to make $200, on a $500,000, unit that you have a mortgage and then you pay the HOA and the insurance and everything like that. And when you boil it all down, it's like, because you can't charge $5,500 in rent, for a 2-bed.
Right. I could probably charge $4,000 for my place.
Yeah.
It's probably about what it would be. And, I could make a little bit of money if nothing goes wrong.
Right.
If I don't have, if I don't have any gaps in renters, if I have a tenant that lives here for 5 years without breaking anything, I would do okay. But the second the fridge breaks, whatever, obviously I can raise my basis and all that, but at the same time, it's still expensive. So Well, if I have 10 of them, then yes, then you could use them to work, for you, but it's tough.
I know. Well, I want to share. I actually got a win, and it was I don't remember who said this last week, kind of to me or brought it up. I was talking about hiring, and that maybe I was looking just for unicorns, in a field of stallions or whatever. But I actually had a conversation with a lady, and I feel like I actually did find a unicorn, even though it wasn't the unicorn I was looking for. I do medical leasing, so in kind of wild. She reached out to my broker via the residential side this week, saying that she is a practicing physician and she wants to get into commercial real estate. Kind of an odd email, you're like, okay, what? So I called her and we talked. She's part-time. She is a practicing physician at Northside. Her and her husband have already bought 2 commercial buildings, medical buildings, and are fully leased out. She's already passed her class test and just waiting for the state. And she's Indian, and her whole friends and family network, her and her husband are already looking at buying a third. Her friends and family network are, all they want to do is buy commercial in the States. And she only wants to work part-time. And I'm like, I'm not looking for part-time, but you bring a lot of value and you're already bringing deals to the table. So yesterday, I emailed her back, told her I would love to have her come on board once, and she emailed me last night. She's like, I'd love to, thanks. So looks like I got my first hire.
Yay.
Yeah.
All right.
Nice.
Good job.
Good job.
Thank you.
That's awesome.
So I took some of y'all's, I guess, guidance to heart last week. I was thinking about that as I was talking to her. So I appreciate that. I feel like, maybe it was a little Cheryl and Matt talking last week, telling me that or something. Yeah. Awesome. Well, I don't want to keep anybody. If anybody's got anything to say, if not, we'll close this out, and I'll see y'all next week.
All right.
Yep, sounds good. Well, hey, thanks for putting this together as always.
I appreciate y'all.
It's not my favorite time of the day, but I get great things. So appreciate you.
Awesome.
Yeah,
Thank
I
y'all.
wouldn't be opposed to moving it to 8 to 9, but
No. Winners wake up early, y'all. I got shit to do at 8 and 9. I'm usually already working by now.
Just because I'm awake doesn't
Yeah.
be social.
Yeah, right. Awesome. Well, thank y'all. Y'all have a great weekend. I'll
All
talk
right.
to you soon.
Take care.
appreciate it.
Bye.
Bye now.
Bye-bye.
Bye.